As of 2024, there are approximately 3,300 billionaires in the world. The mindset and approach of billionaires often challenge conventional beliefs and are markedly different from those of most people. Here are 15 insights, typically known only to billionaires. 1. Collaborative growth through shared equity. Becoming a billionaire often requires relinquishing a significant portion of your company's ownership to scale effectively. While it's tempting to maintain 100% control, the most successful entrepreneurs understand that growth often necessitates sharing equity. For example, Jeff Bezos retains around 10% of Amazon, yet his wealth has skyrocketed due to the company's massive valuation. By inviting investors and partners to buy in, you can access the capital, expertise, and networks needed to propel your business far beyond what you could achieve alone. The lesson here is that a smaller piece of a massive pie is often more valuable than full ownership of a small venture. 2. Real estate versus private equity. Real estate is a proven path to building substantial wealth, particularly for those starting with limited capital. However, the ultra-wealthy understand that while real estate can make you a millionaire, private equity is what turns millionaires into billionaires. Real estate provides stable, long-term returns, but private equity offers the potential for explosive growth by investing in or acquiring companies with high upside potential. Billionaires often diversify their portfolios by investing in private companies, leveraging their capital and influence to drive exponential growth, which far exceeds the returns typical in real estate. 3. Leveraging other people's money. Billionaires are masters at using other people's money, OPM, to fuel their ventures. The concept is simple. Rather than risking their own capital, they secure investments from friends, family, banks, and venture capitalists to fund their businesses. This approach allows them to scale rapidly while minimizing personal financial risk. For example, they might start by raising $100,000 from investors in exchange for 20% equity, valuing the business at $500,000. As the business grows and attracts more investors, its valuation increases, allowing the founders to raise more capital while retaining a significant equity stake. This cycle of fundraising and growth can eventually lead to billion-dollar valuations, all without heavily depleting their own resources. 4. The buy low, sell high principle. At the core of nearly every billionaire strategy is the principle of buying low and selling high. Whether in commodities, real estate, or technology, the concept is universal. Billionaires apply this principle on a massive scale, often leveraging market inefficiencies to purchase undervalued assets, businesses, or even entire industries. The key difference between them and others is scale. They don't just buy one undervalued property or stock. They buy in bulk, negotiate fiercely, and sell when the market is most favorable. By continuously reinvesting profits and scaling up, they amplify their wealth exponentially over time. 5. Preserving wealth through fine art. Art is not just a passion for billionaires. It's a strategic investment. As a store of value, art has several advantages over other asset classes like real estate or precious metals. It appreciates over time, offers tax advantages, and can be easily transported across borders, making it an excellent hedge against inflation and currency fluctuations. Billionaires often purchase blue-chip art, works by renowned artists that have a proven track record of appreciation, and either display them in museums for additional prestige or store them securely as part of a diversified investment portfolio. The art market's unique characteristics make it an attractive option for the ultra-wealthy seeking to preserve and grow their wealth. 6. Diversifying beyond the stock market. While stock market investments can be a reliable way to grow wealth, they are rarely the path to billionaire status. Stocks generally require a long time horizon and significant starting capital to produce substantial returns. Moreover, the stock market's inherent volatility and the need for diversification mean that even well-timed investments might not yield billionaire-level wealth. Instead, billionaires often create wealth by building and scaling businesses where they have more control over the outcome. They understand that luck plays a minor role in achieving billionaire status compared to strategic thinking, hard work, and taking calculated risks. 7. Growing wealth through collaboration. Billionaires often bring others along on their journey to massive wealth. Early investors, co-founders, and key employees can all become incredibly wealthy by supporting a visionary leader in the early stages of a business. For instance, Peter Thiel's initial $500,000 investment in Facebook eventually turned into over $600 million. This principle of shared success underscores the importance of surrounding yourself with talented and supportive individuals who believe in your vision. By aligning their financial success with the growth of the company, billionaires create powerful incentives for everyone involved to drive the business forward. 8. Limited liquid assets. Contrary to popular belief, most billionaires do not have vast amounts of cash sitting in their bank accounts. Instead, their wealth is primarily tied up in assets like stocks, real estate, and private businesses. These paper assets can be highly valuable, but are not easily liquidated without affecting their market value. When billionaires need cash, they typically don't sell their assets. They use them as collateral to secure loans. This strategy allows them to maintain ownership while accessing the capital needed for further investments or personal expenditures. Additionally, by borrowing against their assets, billionaires can avoid selling them at inopportune times and defer taxes. 9. Profiting from uncertain times. While many people see recessions and economic downturns as periods of financial loss, billionaires view them as opportunities. They understand that during a crisis, assets often become undervalued as others panic and sell. With a long-term perspective, billionaires are prepared to buy when prices are low, capitalizing on the eventual recovery. Warren Buffett, for example, has famously used this strategy, holding cash during boom times and deploying it during market crashes to buy undervalued companies at a discount. This countercyclical approach allows billionaires to acquire valuable assets at a fraction of their true worth, setting the stage for significant future gains. 10. Relying on experts. Billionaires recognize that they cannot be experts in everything. To achieve and maintain their wealth, they rely on a team of highly skilled professionals, including financial advisors, lawyers, accountants, and executive coaches. These experts help manage risk, optimize tax strategies, navigate legal complexities, and ensure that the business operates smoothly. By delegating critical tasks to trusted advisors, billionaires free up their time to focus on high-level strategic decisions that drive growth. This reliance on expertise is a key differentiator between billionaires and those who try to do everything themselves, often to their detriment. 11. Business deals over consumer sales. While selling directly to consumers is profitable, true financial gains are frequently found in business-to-business transactions. These are contracts between businesses where one company provides goods or services to another. Billionaires understand that enterprise clients are typically more stable and willing to pay higher prices than individual consumers. For example, Amazon's cloud computing division, AWS, is far more profitable than its retail operations, generating billions in revenue each year. Similarly, companies like Google and Microsoft earn substantial income from their enterprise software and services. By focusing on business-to-business, B2B, deals, billionaires can achieve larger and more predictable revenue streams. 12. Building on existing foundations. Many billionaires did not start from nothing. They often had significant advantages from the beginning. This could include wealthy parents, access to elite education, or a strong professional network. These advantages provide a safety net that allows them to take bigger risks, knowing they have something to fall back on. However, even those who start with less often leverage their environment to create opportunities. The key takeaway is that while hard work and determination are essential, having a supportive background can make the path to billionaire status more achievable. For those without these advantages, it's crucial to build a network and seek out opportunities that can level the playing field. 13. Ethical considerations. The accumulation of vast wealth often involves navigating ethical dilemmas. Some billionaires have amassed their fortunes through practices that, while legal, may be seen as exploitative. This includes outsourcing labor to countries with lower wages and less stringent labor laws, or using tax havens to minimize their financial obligations. The use of child labor in industries like technology and fashion has also been a controversial issue. While these practices can lead to lower costs and higher profits, they raise important questions about the moral responsibilities of the ultra-wealthy. Increasingly, consumers and investors are demanding more ethical practices, which may influence how future billionaires build their wealth. 14. Obsessive drive. Achieving billionaire status is not just about intelligence or luck. It requires an intense, almost obsessive focus on success. This level of dedication often comes at the expense of personal relationships, hobbies, and even health. Billionaires like Elon Musk and Jeff Bezos are known for their relentless work ethic and willingness to make significant sacrifices to achieve their goals. This obsession with success drives them to constantly push the boundaries of what is possible, whether through innovation, expansion, or acquisition. However, this single-minded pursuit of wealth is not for everyone, as it demands a level of commitment that few are willing to sustain over the long term. 15. Mastering decision-making and persuasion. At the highest levels of business, the ability to make effective decisions and persuade others is crucial. Billionaires are often faced with complex choices that can have significant consequences for their companies and personal fortunes. The best of them have honed their decision-making skills to a fine edge, relying on data, experience, and intuition to guide them. Additionally, they are master persuaders, able to convince investors, partners, employees, and customers to support their vision. This combination of strategic thinking and persuasive communication is what enables them to navigate the challenges of scaling a business and achieving extraordinary wealth. Continuous learning and refining these skills are essential for maintaining their success. Thanks for joining us on this journey into the minds of billionaires and the secrets they use to build massive wealth. Remember, it's not just about knowing these insights, but applying them to your own life and business. If you found value in this video, don't forget to hit the like button, share it with others who are striving for success, and subscribe to our channel for more strategies to elevate your financial game. Stay focused, stay driven, and keep pushing towards your goals. Until next time, keep dreaming big and taking the steps to make those dreams a reality. We'll see you in the next video.